Good evening, ladies and gentlemen. Warm welcome, one and all, to the 15th session of Nifty Banker, India's first retail bank Nifty Traders Conference. Friends, this is your host, Ashok Devanampriya. Welcome back to the last but one session, friends. And we regret the inconvenience caused yesterday due to some personal emergencies. However, we have taken the countermeasures to ensure that the learnings will not be stopped. So we will host the videos very soon and kindly make a note of it. Well, today is our speaker from Chennai, 𝐁𝐫𝐞𝐚𝐳 and Rajendran, the founder of Square my very good friend, fellow trader, fellow algo trader. I have learned many things from 𝐁𝐁𝐵 as well. So he's been in the financial markets maybe 10 years, 𝐁𝐁𝐵.
Yes, man, from 2008.
Okay, then you are my senior. So so one special thing about 𝐁𝐁𝐵 is he's extensively acting in Quora. So he has shared more than 800 articles in trading, an avid blogger, an excellent algo trader, a systematic trader. He started Square way back in 2016, where they do algo trading. They sell some algorithmic bots and various other things. If you want to know more about him, feel free and go to his website to learn about his products and services. Well, 𝐁𝐁𝐵, it's really a great pleasure to have you on board once again in Traders Gurukul family. I extend my warm welcome into the program.
Thank you, Ashok. Thank you so much for the invite. I am really delighted to be in this session. Even though it is a 15th session, people would have already been so tired. But no, let me try to give you a brief or a short and crisp trading rules today. And before I cover all these trading rules, let me tell you what are the things that I'm going to cover. First thing, I'll just explain in layman terms about the algo trading and the trading systems in general. And then I'll give a normal example how even a normal retail trader, without even having any specific coding knowledge, can do some backtest, which can really help them not only to create a trading system, will also help them to make certain investing decision. I'll give you an example how we did it, and also I'll explain about list of big funds who are specifically focusing on data and then making decisions out of it. I'll explain about that, and then I'll give you the rules of this intraday breakout trading strategy, specifically designed for Bank Nifty, which will be focusing on future segment. I'll explain the rules of it, and I'll give you the backtest results for the last 10 years, where I'll explain all the metrics, the drawdowns and everything, and then followed by question and answer sessions. In case if you have guys any doubt, you can post it in the questions window. Probably we can look into those questions by the end of the session. So we'll start the session now. I look into this questions by the end of the session. So let me start with this slide. Fine. So to start with, when I was trading, like when I started trading in 2008, it was just a random trade. Like I just came to know about trading and all this stuff through just news channel. Back then there was no Facebook, no Zerodha. The only thing that was there was Orkut. I remember that was a social media. And in addition to that, couple of Orkut communities was there. And as usual, most of the users would open an account with 𝐁𝐴�R if they have traded with 10 years before or 8 years before. So I also opened an account with 𝐁𝐴�R. I just started trading. That was the period I started trading, but it was completely random in nature. Like before I get into college, I'll just look into the business channels, or I'll look for some news specifically focusing on any stocks in the newspaper, and I'll see, okay, this is a positive news, let me buy it, or this is a negative news, let me sell it. And then I slowly moved into chart patterns, where people were talking about head and shoulder, cup and handle and all these patterns. So I was trying to look all those patterns in the charts, and then I was trading. Still I was not able to figure out. Some days it was loss, some days it was profit. But only from 2014 I specifically started focusing on system based trading. Like back then there was still no API, no other no brokers were giving all those infrastructure. I remember it was Symphony Fintech from Mumbai who was giving this infrastructure, and they were costing so high. Even though it costed so high, still I was able to proceed with it because that solved my problem. So only thing with regards to algo trading when I started was a person who doesn't know anything about a trading system, if someone wants to get started into this kind of from news based to rule based, the first thing that they need to know is any trading system that you wanted to automate or you wanted to backtest and follow it, it should be quantifiable in nature. So there should be certain precise rules that you should be able to tell the computer, like I should buy this particular stock if it goes above 200-day moving average, or I should sell it if it closes below 200-day moving average, or I should able to buy it if it crosses last 10 days high, last 3 months high, or if it closes below no last 10 days low or last 10 days or 20 days low, I should sell it. So all these things which can be really quantified, that can be coded and backtested, can be considered as a trading system. Anything that cannot be quantified, you cannot consider as a trading system. So you cannot tell a machine to look for a head and shoulder pattern. If it is a head and shoulder pattern, you have to tell them the exact precise rules. So these visual chart patterns was existing in the markets prior to the computer era. So back then it was mostly visual chart patterns. People used to get these details plotted in the graph paper, and then they were able to see some patterns and they were repeating it. Once the computer era came into the picture and more people were able to code these quantified rules, it completely changed. So only if you wanted to develop a trading system, just keep it in mind that only things that can be quantified can be considered as a trading system. Things that cannot be quantified, that the things that you cannot clearly explain as a numeric or numeric rules, obviously you cannot code it, so you cannot backtest it. And if you cannot backtest it, obviously you would not be able to trade it in live, because backtesting gives you the conviction to take that next trade in spite of the last 5 losses or 10 losses. Because once you backtest a system and clearly see, okay, this is how this particular system performed in various time frames, various durations, bull market, bear market, and sideways, it gives you conviction to hold on to your trade. Even though you see streaks of losses, you will still be able to take the next trade. But if you do not test it for a prolonged period of time, obviously you will doubt yourself, and sooner or later you will stop following that system. So that is why it is essential to move from news based to rule based, and even that rule based should be able to be it should be a quantified structure, and then you have to test it, code it, and then only you should proceed with the live trading system. So I'll give you a good example. This was in the year 2018. So 2018, I remember it was in September. I was even actually day trading that day, and suddenly S Bank and DHFL started falling, and it was falling like 30-40% in one single day. And I have seen stock falling like 20%, 30%, or a higher percentage with other stocks, not big companies like S Bank or DHFL. There will always be stocks like Arcom, or the stocks which is actually fundamentally not at all doing well. We know it is going down because that was a problem. But that day when S Bank and DHFL was going down, it was actually doing well, and most of the mutual funds were holding it. Most of the large fund houses were holding it. In spite of that, a good companies like S Bank and DHFL, if it is falling 30-40% in one single day, it means there is something fishy about it. And that too, only retail investors would wait for some news, and then they confirm it, and then they go ahead and exit it or buy it. But most of these large fund houses who were holding thousands of worth of these stocks, the moment they see a smoke, they exit it. They really don't need to wait for the fire, because they know there was something fishy about this particular stock. And since first one fund house started exiting it, and that was followed by multiple fund houses, which pushed the prices to a greater extent. So S Bank and DHFL both crashed almost 42% on that one single day. And by the end of the day, there were two things in investors' mind. So people who have invested in DHFL just prior to that were invested at 600 rupees. They would be sitting in a loss of 50%. And similarly with the S Bank, people who were invested at 400, 300 levels, they were also at a huge loss. So they have two options. Either they should book the loss and go out, or most of the people, what they did is, instead of booking losses and exiting from that, they tried averaging it. With every fall, they were kept on buying it because the news was still not out. They were still thinking that this particular company is fundamentally good. It is just a correction, or it is just a panic in the market. So let me buy more. That is what most of the retailers actually did. Even I posted it in Quora the same day. stating that this particular stock could eventually end up in a penny stock. I posted that with specific analysis. That analysis is what I'm going to share you. So what I did is, this can be done by any persons, not only people who know about markets or who know about coding can do. Anybody can do it. So what I did is, I realized, okay, DHFL and S Bank crashed more than 30-40% in one single day. I went back and I wanted to find what are the list of companies which has crashed more than 40% in one single day. First thing. And second thing, I wanted to find out what has happened eventually to these stocks. After it crashed 40%, what happened to these stocks 2 years, 3 years down the line? Are they bounced back, or are they ended up as a penny stock? That is what I figured out. And I could see some 10 to 12 stocks which has crashed more than 40% in one single day, like Satyam Computers, Financial Technologies, Core Education, Unitech, GTL. And when I check the chart, from the day that it has crashed big time, that one single red bar you could see here, from there it kept on going down. And the same with rest all the other stocks. Even the Core Education, after a big fall, it continued with a few other crashes, and eventually it traded as a penny stock. And the same goes with GTL. So all these stocks which crashed big time in one single day eventually ended up as a penny stock. They were never ever able to get back to their previous high. So once a company can give you a bad quarters or no bad performance, but once there is a corporate governance issues, definitely that company, it is very difficult for them to get back. These large fund houses would never invest in a company which has a bad management, and that is what eventually happened to all these stocks. And I figured out on the same day, on 21st September 2018, this is what going to happen with both these stocks. And I have written up a detailed article, stay away from DHFL and S Bank. Few people did, and most people questioned about its fundamentals, and they kept on averaging it. But this is what eventually happened. So even this particular analysis did not take much time. So simply have to look for some stocks which crashed more than 40% in one single day, and then look their charts, what has happened to them eventually. And all these stocks ended up a penny stock, and that gave a conviction, okay, let me not invest in DHF, let me not catch the falling knife. Even if I'm holding it, even my brother-in-law was holding DHFL actually. I was telling him to exit it, but he had the same conviction that this is a fundamental company, it should bounce back. And finally he sold it for 15 rupees or 20 rupees. So this is the problem with regards to when you go with the fundamental based approach. First the news comes out, the price always reacts later. Like, I mean, the price always reacts first, and then the news comes out later. So if you're waiting for the news, definitely the impact would be much larger. So do not wait for the news, go with certain data analysis and see if you're able to see any specific patterns like this, which could give you a conviction to take up the trade or take up that investing decision. So this is what I wanted to convey. So why backtesting helps, why data analysis helps, or why historical data is really helpful is because everything in markets is repeated to a certain extent. So you can't predict what is going to happen, but definitely you would be able to handle your risk very precisely with these kind of backtest results. So even when I started trading, most of the people in the beginner stage, they research about Warren Buffett, read about Warren Buffett quotes, and all they know about is Warren Buffett. Even I did the same. But only from 2014, I came to know about a person called Jim Simons. So how many of you are already aware of Jim Simons? Have you heard about this name? Have you heard about Renaissance Technologies? How many of you know specifically are more interested? Most of the people who are interested in quant or quantitative stuff would have known him. Few people know him and few people do not know him. Let me give you a brief intro about him. See, Jim Simons is actually a mathematician. So this guy is from US, who is actually worked as a code breaker for US intelligence. So this mathematician who's excellent with his PhD and helped actually US intelligence on a military services using his math skills. He was helping during the World War times. And this guy eventually had some conflict with his superior and quit his job, and he started focusing on the markets during the late 1970s or 1980s. And what they did back then was completely new. Like, that was a time where it was a Warren Buffett era. Like, Warren Buffett was a fundamental investor, so he was investing in most of the good companies, and most of the fund managers, most of the large institutions were focusing only investing on companies based on the fundamental aspects. But he is the only guy who started Renaissance Technologies hedge fund, which is completely based on quantitative analysis. So he hired mathematicians, a group of other mathematicians who are excellent in academic, and they all sat together and they combined a team, and they crunched a large set of data, not just 5 years or 10 years of data. They almost got 100 years of historical data of US markets and other world markets, and they were able to find out certain anomalies in the historical data. They were able to find out repeated patterns over the 100 years of data, and their team was successful. So with just